This video is on Chapter 5, Inventories and Cost of Sales. I will review alternate exercise 5.5 and 5.16. This is exercise 5.5, alternate, and we are presented with this information. So we have beginning inventory, sales, 2 sales and 2 purchases. We're using the perpetual inventory system, and we're going to compute the gross profit under 4 inventory methods. So we'll have to go through all 4 methods to see what our gross profit will be. Our revenue is here. We sold a total of 440 units at $17, so we've earned revenue of $7,480. Now we have to determine the cost of goods sold under 4 different methods: specific identification, weighted average, FIFO, and LIFO. We're looking at specific identification first. With this method, they have to tell you exactly either what they sold or what they have left. We've listed here the beginning inventory and the purchases. We know we sold 440 units. We had a total of 810. So the difference between what we had total and what we sold is what we have left. So we sold the 440 units, which means we have 370 left in ending inventory. Now it's telling us that the ending inventory, so they're telling us this part, consists of 370 units, where 250 are from the January 30 purchase, which is here at $6. 70 are from the January 20 purchase, which is $7. And 50 are from the beginning inventory, which are $8. If we have 50 left, and we started with 400, the difference is what we sold. We had 160 of these, and we still have 70 left, so that means we sold 90. And we had 250 of the group at 6, and we still have all of those left, so we haven't sold any of those. Now we just have to list out the unit cost and multiply. Our cost of goods sold under specific identification is $3,430. Now we can enter that here to get the gross profit under that method. Now we're looking at the weighted average method. We're starting with our beginning inventory. The next thing that happened on January 10th is we made a sale of 300 units, and we only have one group there. We only have $8 inventory. So we did sell those at $8. Now we need to determine our balance. We have 100 units left at a cost of $800. So 800 divided by 100 is obviously still our $8. We made a purchase on January 20th. We need to add that, and we paid $7 this time, so the cost went down. Now we need to determine the new average cost. We'll get the total of the units, 260, and the total of the dollar value, 1920. We'll take 1920 divided by 260 to get the new unit cost of 7.385. Now, on January 25th, we made a sale of 140 units. We will need to then compute a new unit cost and list in the cost of goods sold columns the units that we sold, 140 at 7.385, and multiply that out. Here's our subtotal. We take $886 left divided by 120 to get the new unit cost of 7.384. We made a purchase on January 30th of 250 units at $6, so the price went down again. Now we'll compute our new unit cost get the total units, total dollars, take the dollars divided by the units, and now our unit cost is 6.449. We're going to look at the total cost of goods sold. We're going to add the two cost of goods sold amounts from our two sales to get 34.34, and now we can enter that in our income statement under the weighted average method. Our gross profit under that method is $4,046. Now we're looking at the FIFO method, which means we're selling the earliest ones first. Start off with our 400 units at 8. Add that over here in our ending inventory columns. On January 10th, we made a sale of 300 units, so that goes in the cost of goods sold section. And it's at $8 because that's the only unit cost we have. Now we need to get our new ending inventory. 400 minus 300 is 100 at 8. On January 20th, we made a purchase of 160 units at $7. Now we always bring down the previous balance in the ending inventory column and then add what we just purchased. Then we can get our totals. On January 25th, we made a sale of 140 units. Using first in, first out, we want to sell the earliest ones first. So the 100 units at $8, we'll sell as many of those as we need to. We sold 140, so all of the first 100 will be from the $8. Then we need another 40. The other 40 that we sold will be from the group at $7. And then we had 160 minus 40 gives us 120 at 7 is what we have left. Then we get our subtotals. On January 30th, we made a purchase of 250 units at $6. Now we're going to bring over here our ending inventory. We had 0 at 8. We had 120 at 7, and we just purchased 250 at 6. So we can get our totals now. Our total cost of goods sold would be these numbers added together, $34.80. Now we can enter that in our spreadsheet here. Under the FIFO method, gross profit is $4,000. We have one left to go, which is LIFO. Start off looking the same as FIFO. Last in, first out means we're selling the most recently purchased ones first. We sold 300 units. We only have a group at 8. So again, this will look just like FIFO so far. We made a purchase on January 20th of 160 at 7. Bring over our balance. Bring down what you had and add the 160 at 7. Then on January 25th, we sold 140 units. Under LIFO, we sell as many of this most recent purchase as we can, and we can get all of it from there. So 140 at 7, 160 minus 140 leaves us 20 at 7, and we still have all of the 100 at 8 left. We get our subtotals, and then on January 30, we made a purchase 250 at 6. Bring down our balance. We have 3 separate rows for the ending inventory. And our total cost of goods sold is $33.80. We will enter that here. Gross profit under LIFO then is $4,100. Which method yields the highest gross profit? That would be LIFO. Does gross profit using weighted average fall between FIFO and LIFO? So is 4,046 between 4,000 and 4,100? And it is. Average will be between those two numbers. If costs were going up instead of falling, which method would yield the highest gross profit? It would be the opposite here, so it would be FIFO. The last exercise is 1516, which is on computing the lower of cost or market. So here we're selling helmets, bats, shoes, and uniforms, and we've listed them here. This is our cost, and we've listed that here, and the market per unit. So the first thing we're going to do is go ahead and multiply to get the totals. 40 units times 83, 28 times 128. These are the amounts that are going in the cost. And then under market, we'll take 40 at 90, and then 28 at 118. We're going to get the totals here. Now, which one is lowest? Is 3320 lower than 3600? It is, so that's the number that's coming over here. And the next row, 3304 is less than 3584, and next is 9513 is the lowest, and then this one is the same. Get our total here. We have our cost on our books at 21,058, but the lower of cost or market is only 2337, so we actually have to record a journal entry to record the loss of the difference, which comes to 721. This concludes the video for Chapter 5, Alternate Exercises. And your last question at Connect is a Tableau assignment where you will compute the goods available for sale using the specific identification method.